Hey, what's going on, YouTube? Kenny here. So today the S&P retraced like 1.2%, but some of y'all's portfolio got absolutely blasted, like completely annihilated with a 1.5% move to the downside on the S&P. Like, Kenny, why is that? Why did I get completely annihilated? That's because you indeed had what I call the YouTube 10x starter pack. Sounds like that on purpose. Starter pack. That's what you had. So, back in the day, we did audit some portfolios. Even, for instance, Frank the Tank, who we love in the chat. He showed us our portfolio. Seemed reasonable at the time, especially given the momentum that these stocks had. But obviously, we try to kind of peel off a little bit, try to think about portfolio balancing, and try to look at trades from a different lens, kind of set us up for days like today. And so, there are places that you were safe today, like consumer discretionary. But we're going to talk about a couple of charts that make sense to me, and one chart that we are absolutely looking at. So, definitely a bloodbath today. We were short the market forever. Today, we kind of let our foot off the gas. We dropped almost all of our short positions except for two, which was Rivian and OIH. And those printed, but honestly, took a couple of trades and got spit out today. Took a couple big trades because we were pretty sure. I'm going to show you why we were pretty sure and how that ended up not being the case, and where I think we are and how bad I think we are. But for those who bled off today, here's to you. This is a Michelada cup. If you didn't know what this is, it's you put your favorite cerveza in there, but it's like gas station stuff. But I actually pay a ton of money for it to get it shipped here to Germany, because obviously it's not in Germany. It's a California thing. Well, it's not California. It's obviously like Mexico, but you know what I mean. Yeah, cheers, 10x starter pack people. All right, here we go. So this is ASAN. ASAN is one of those 10x starter pack stocks. They look amazing when they're going up, and they go up in an amazing way. But, right here, we said it's overpriced, right? When it got here, we said this is silly, and we attempted to get some short positions. Got spit out. Started looking at it again when it was up here, and believe it or not, this is the sad thing. This is the very, very saddest thing. Instead of being diamond hands, we paper handed. Guess where we kind of let off? Like literally right here. We got bounced out literally right before the peel, which is very sad, but it's what happens when you have the funny thing is, with Workhorse and some of these other stocks, like I get one of these every year. Workhorse I got last year. This year was going to be ASAN, but I didn't make it happen. I didn't hold it long enough. And that's just because I just didn't see an end in sight. I mean, this thing kept moving and moving and moving, like for over 6 months here. So anyways, point is, I could not hold. I let go literally right before the end. I got pieces of this chop in here, right? But I didn't get the big move, which is unfortunate. Anyways, what is this big move? Today it was down 26%. You're like, Kenny, who cares? Get on with it. Let's talk about the S&P. Let's talk about the big kind of important chart. So the big important chart is the VIX. Why is that, Kenny? All right, so based on our, multi-factor models, which is a fancy way of saying taking a bunch of inputs, turning them into weights, and shaking up the cube and spitting out some details. The line in the sand for us, for the VIX, for when you should be risk on in the last couple of years, has been 25. So 25 is right here. Okay, so you're like, Kenny, things have definitely passed through 25. Yeah, exactly. Excuse me. But here's the deal. You pass up to 25, you buy here, you get this move. So everything is down is up move, right? So look at this. You pass 25, perfect. Bam, make money. Pass 25, bam, make money. Pass 25, bam, make money. Almost get there. You could have bought that day. Bam, make money. You could have bought this day too. 24, bam, make money. Definitely would have bought here. Bam, make money. Here, no. Okay, so why? Right? Why? Like, and how kind of anomalous is that? It's very, very anomalous. In fact, the reason why it's the most anomalous is a couple reasons. One, there's a lot of congestion up here. It's staying up there. That's a big deal. The second thing is if you switch to the weekly chart, which I won't do right now because it'll take me time to zoom it out. But essentially, there's this is the first time 2 weeks in a row printed over 25 in like you have to go back to like, I don't know, 2016 to see it again. So, I mean, this is very rare. The last time you saw it before that was pandemic. So this is a signal that maybe we might be getting a ton of chop. And so the thing that you have to kind of consider is like here, the market's been very much like this, right? Like you get one big spike, sell off, and everybody buys and comes running back in because there's no other alternative. Tina. No other alternative. But guess what? Might be different this time. Why is that? So if there's congestion, that means there's consolidation. Consolidation can lead to what? And if you think there's multiple compression, but if there is multiple expansion and it's getting silly, it might be time for it to come back down, come falling down. How do we know this? Maybe there is an alternative. Look at this. This is 20-year treasury bonds. Look at what it's doing. Look what it's doing. It's doing the up thing, which means there is now an alternative. Watching this very closely. I mean, it has to recede a little bit. So you're asking me, Kenny, what are we doing? Okay, so obviously there is I wouldn't say there's a full new trend. It's pretty close. There's a lot of what they call technical damage. A lot of the chart technicians are saying that. But a lot of people are also saying that we're going to rally to 4,700 and there's going to be a Santa Claus rally. I'm not so sure. What I will say is that we've touched this 100-day moving average, and today, quick touch and bounce, okay? A little bit of a bounce. That said, we can definitely hit the 200 and still be healthy. Just think about that. I'll say it one more time. We can still hit the 200 and still be healthy. Okay, here's the thing. What I think will happen, it's impossible to position against this, right? You can't position to the up move because in general, all things being equal, something should peel, right? That's just the way volatility works. That's the way the VIX works. So, picked up some SVXY, some equity because we don't know when. So it should print for us. But here's the other piece. I think, though, even if we get a peel, we can definitely do what we're doing here. There's congestion. And again, the 10-year is what we're really watching. It can still kind of make its way up. And if it's the bubble bursting, you get a pandemic-like situation like this, like right here, that it gets really scary and really silly. And if it does do that, then just beware. It might take a while to kind of progress. I think that's going to happen? Like, no. Even a bubble burst, I think maybe gets up to like the 40s, 44. And I'm not calling for that, but I'm saying like this is kind of a place that it could definitely go. But, what I think is going to happen, and this is obviously just palm reading, just like everybody else. But I do think there's going to be a recovery here. They're going to try to recover. Even if it's a bull trap, you still get a recovery. And I guess it recovers down maybe to about 27 or something come Monday morning. Really depends how the future sets up. Future is going to be really important. Got to check out those morning minutes, you know what I'm saying? So, yeah, futures set up. So what I think was going to happen tomorrow is like we ended up here. I think we hit the top of this regression channel here, right? So we hit the top of this regression channel, maybe like 1% move, 2% move to the top, and then we might peel back down. And that's the scary part. If we get that 2% and we peel back down, I am very, 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 very scared for this market. If not very scared. I'm not very scared until we like blow past 430 or something like that. Then I do think that this multiple expansion has come to a halt ahead, and then I will definitely be all in cash, even in my trading accounts, and probably take out some of the more risky investments that I have in my accounts too. Probably not. That's a joke because we don't touch our investment account, but just saying. Yeah, so point is, if we run, that's great. We get the Santa Claus rally into year's end, and that looks like about right there, something like that. But I mean, honestly, I do think this is what I really think. Even if we were going to run, I think we get a day, we peel, and then midweek we start running, right? Why do I think that? Just because I just don't see a kind of clear path. If it was gonna make a move, it would have made a move end of day, and I think it would have been a lot stronger. We wouldn't have ended on a red candle, so we're ending on some serious red candles, 3 in a row. I would call it chop, except for the fact that we're not doing like full recoveries here. But the good news is, in terms of retail alignment, retail money, is sidelined enough. So there's definitely enough bearish sentiment for sure in the AAII to have money being deployed. So more so right now a buyer strike than the fact that there's no money coming in. But there's also, again, alternatives with the treasury yields and other asset classes. So yeah, that's just kind of what I got for today. And yeah, it seems like you all like the morning minutes. I really thought about stopping it just because I didn't think anybody was really caring about it, just because there wasn't that much views. But like, even if it's just like 10, 20 of y'all that like it, we'll do it. I'm all about it. I'm all about the community. So yeah, probably put a poll out. But now I'm not going to put a poll out. Just put down the comments. That way you'll help this video out. Put down the comments if you want morning minutes to continue. If you do, if we get 10 people to say morning minutes needs to continue, we'll continue. Take care, everybody. See you tomorrow. Bye.